Hello and welcome to BYJU'S Exam Prep IAS. Welcome to the initiative of Target Prelims 2022. I hope all of you are doing very well. Already you are done with all of your preparation and now you are focused on revision of important subjects. Now we here at BYJU'S, like last couple of years, are here to provide you the assistance in terms of revising the current affairs. So in this particular initiative of Target Prelims, for the next many of the weeks, that is till 21st of the next month, we will be providing the current affairs videos for you. We will be covering all the very important current affairs, not only from the last 1 year, because the tendency of UPSC has been that they will focus on the 1.5 year ago's newspaper article or 2 years before newspaper article. So in this particular course, what we will be doing is, we will not only focus on the current affairs of 2022 or let's say second half of 2021, we will go beyond that. We will go, let's say in 2020, we will enter into the first half of 2021 and we will cover whatever important current affairs are there in all the subjects in this particular initiative of Target Prelims. Already the polity subject has started. Today we will start with economics. So in the next couple of weeks, you will also come across the current affairs videos on international relations, ecology and environment, science and technology, art and culture, places in news, important committees, etc. So please stay tuned, join us every day live at 7:30 p.m. and learn these particular concepts in clarity. Now some of you keep on asking me, sir, should I keep joining this every day or should I follow a strategy wherein once all your sessions are over, that is on 21st, should I keep visiting this particular page every day or should I simply look at all these videos at once? Just follow my argument here. Many of you basically wait for all the videos to be over so that in a single shot you want to have a look at all the videos. Now the problem is, you will have 22 videos and each of the video will be of 2 hours each. So in a single shot you are trying to cover current affairs of 44 hours and that is a very cumbersome process. So my recommendation or a strong advice to all of you will be, join us every day live at 7:30 p.m. and next 2 hours dedicated for UPSC preparation, specifically current affairs. Now some of you will simply say, sir, I am too busy. How do I remember? How do I remember to join? Simple. Subscribe to BYJU'S Exam Prep IAS YouTube channel and hit the bell icon so that before the video starts streaming, a notification will pop up and you can join live and enjoy this particular benefit. Next very important point, this initiative that we are going to provide to you, it is absolutely free of a cost. It's available to everyone. In return, what we expect from you is, of course, the like button, that is hit the like button. You will have to subscribe to our YouTube channel and you will also have to tell us in the comment section how the video was. Give us the inputs. Did you get the benefit from this? And if this was beneficial, please let your friends also know about this initiative so that they can also get the benefit. So with this particular caveat, let me start the discussion for the Indian economy. Like I've already mentioned, please make a note of this. We are not just going to cover the current affairs of last 1 year. We will focus on other concepts also which are very important, which are relevant, which have appeared, let's say in 2020 or the first half of 2021, we will have a focus on all those concepts. Let me start. The first question is on the concept of autarky. The idea of autarky. Now, in general discussion or let's say any reference book that you have used for the preparation of economics, this particular concept would not be discussed. They will not mention this particular concept. But in the last couple of months, because of the war that has been happening between Russia and Ukraine, or the invasion of Russia of Ukraine, you may call this A or B, doesn't matter. This term has come into discussion now. What is the basic idea of an autarky? Autarky basically refers to an economy which is focused on self-reliance, which is basically inward looking, which has the policies wherein they will conduct the trade within their own country rather than conducting the global trade or rather than interacting with the other countries. For example, in the basics of economics, you will come across a term called as open economy. That is the basic idea wherein a country has a trade relation with other countries. For example, what do you think India is? Do you think India is an open economy? Of course it is. India is an open economy. But how do I understand the term open economy and the exact opposite of that, a closed economy? Look at Indian economy. Do we conduct trade relations or do we conduct transactions with the rest of the world? What kind of transactions am I referring to here? We will export goods, we will export services, labor from India, move to the rest of the world. Remittances come into India, remittances flow out of India, goods and services come into India. So, in simple terms, we are having a trade relation with the rest of the world. And whenever any country follows this kind of a concept, we refer to this particular economy as an open economy. And the opposite of the open economy is the idea of a closed economy. And the closed economy is an example wherein the country doesn't conduct trade relations with the rest of the world. There are no transactions with the rest of the world. In fact, they are conducting any kind of a trade, they are trying to conduct it within the same country. Such a country is referred to as a closed economy. And this particular term, autarky, a complete autarky, generally refers to the concept of closed economy. A complete autarky generally refers to the concept of closed economy. Sir, why it is there in the newspaper then? The trade relations between Russia and rest of the world have deteriorated in the last couple of months. Many of the countries have imposed sanctions. India was conducting certain trade relations with Russia. We have continued it. But other countries such as USA, they have imposed sanctions and they want other countries also to do the same thing. And if all the other countries impose sanctions, do not conduct any transaction with a country such as, let's say, Russia, which is very, very difficult, mind you, then that particular country doesn't have any trade relations with other countries. It will start selling the goods and services, whatever it is, within the same country itself. Within the domestic market, it has to conduct the trade. It cannot export goods and services because other countries will not accept it. And it cannot import goods and services, other countries will not export to Russia. So, in that context, an extreme autarky, that is a complete autarky, will be referred to as a concept of closed economy. And this was there in the newspaper in the event where other countries were basically imposing sanctions on Russia and the trade relations are continuously getting deteriorated. Done. So, the right option for this particular question will be, have a look at this. A country with monarchy? No. A country with open economy? No. Opposite of this. A country with closed economy. So, the right option will be option C. The term autarky is related to the concept of economy which is a type of a closed economy. Done. This is the current affairs concept of autarky. Let me go to the next concept, next question. Which of the following is related to term shrinkflation? Which of the term is related or which of the following is related to the term shrinkflation? Now, this has been there in the context of Indian economy. And first and foremost, understand this. Just like India, which is facing a very high rate of inflation, because if you have read the newspapers, you would know this. In the last couple of months, continuously, the WPI wholesale price index has remained above 10%. In fact, it has reached 13%, 14% like this. And the retail inflation, which is measured in the concept of CPI, that also has remained over 6%. So, the problem with this kind of an inflation rate in the economy is, when you look at the definition, they say that inflation rate simply means the price levels are rising up in the economy. The price levels are rising up or persistently increasing in the economy. We say that, imagine here is a basket of goods and services. Again, so basket of goods and services in what? CPI, because in WPI we do not consider goods. By the way, I am telling you even the static portion here. Understand this. The basket of goods and services, right, let's say this year will cost you 100 rupees. Next year will cost you, let's say, 110 rupees. So for the same basket of goods and services, you are paying more money now. You are paying more money, or else you can put it another way, the purchasing power of the currency has actually declined. That is the basic idea for the inflation. Now some of you might be looking at this definition, you will laugh at me and say that, sir, I am not observing this to be happening in the economy. I was buying a, let's say, a packet of biscuit last year at 10 rupees, even this year I am paying 10 rupees. So your definition is not holding true here. Not necessarily, please understand, because there is a process called as shrinkflation, or there is a practice called as shrinkflation that is taking place in the economy. What do you mean by shrinkflation? Have a look at this particular picture, you will understand. Have a look at this particular picture. In this particular case, two chocolates are being sold. Earlier, right, earlier the weightage of this particular chocolate was 58 gram. Now it has been reduced to 45 grams. That is, in terms of weight of the chocolate, there has been a shrinkage in the weight of the chocolate. And let's say last year also you paid 30 rupees for this particular piece of chocolate or a bar of chocolate, and even today you are paying, let's say, 30 rupees, same amount for same chocolate. So the chocolate brand is not changing, but what has happened? Because of inflation, the company which is selling the chocolate to you, it has actually reduced the grammage or the weightage of the product that they are going to sell to you. In simple terms, for every 1 rupee that you paid last year, you are able to purchase more grams of this chocolate compared to today. This process wherein there is a reduction in the grammage of the product, reduction in the weightage of the product during the periods of inflation, it is called as shrinkflation. I will repeat it again. This particular process which is followed by the companies, which is nothing but akin to stealing from us. Very stealthily they are stealing away the money from us. Again, do not literally look at the term stealing there, right. So understand this. They are telling us that we are not going to increase the price. They will simply sell it at, let's say, 30 rupees per unit only. And we are happy that, okay, even though the prices across the market have increased, my favorite brand has not changed the price. But what they would have done is, they will reduce the grammage of the product, reduce the weight of the product, they will sell it to you at the same price. This is referred to as a shrinkflation. And in the Indian economy, many companies are actually practicing shrinkflation. So whenever inflation happens in the economy, it will have an impact on us. Understand the logic here. It will have an impact on us. It will reduce our purchasing power, no doubt regarding that. But it might be done in a very stealthy manner, because you feel that the price is same, we are getting the same product, the same weight. Companies will not do that. Companies would have reduced the weight of the product, sold it at the same price. Now some of you might be thinking, what is the logic here, sir? What is the logic? Why are they doing this? It is idiotic. Now I know, right? So why are they doing this? Very simple reason. All of us, including me, including you, all of us are very, very price sensitive. All of us are very price sensitive. We will purchase a TV worth, let's say, 2 lakh rupees or 1.5 lakh rupees. But when it is a question of purchasing a cell, that is a battery to put in a remote, we will always choose the cheapest one. So we are very, very price sensitive, right? And we Indians take pride in it. We are price sensitive. So the argument here is, if I am purchasing, let's say, a packet of Lays, and the Lays packet cost has increased from 5 rupees to 6 rupees. What does the law of demand tell you? If the price increases, the demand should come down in the market. So being very price sensitive, I will reduce my demand in the market. So the companies do not want me to reduce the consumption, they do not want me to reduce the demand. So they will simply say 5 rupees, and very bold letter, very, very big letters, they will say 5 rupees even today. But what has happened to the weight of the product? It has actually come down. This is shrinkflation. Now have a look at the options here. reduction in the rate of inflation. Many of you looking at the term shrinkflation, you will realize, you will feel that, right? The first one is the correct one. Absolutely no, this is wrong. Represents the situation with higher inflation and high unemployment rate. That is not a shrinkflation. In fact, there is a different aspect related to this. We will discuss it later, don't worry. Reduction in quantity of the goods and maintaining the same price during the periods of inflation. This is the right option. Option D, and none of the above is not the right option. Done? So, this is related to shrinkflation. Examples I have given here. Please have a look at it later. Next important question here. Which of the following may cause imported inflation? Which of the following may cause imported inflation? Now, what do you mean by imported inflation in the first place? Imported inflation in simple terms means the inflation in a domestic country is caused because of imports. I will repeat my statement here. The inflation in a domestic market is caused because of imports. Right? For example, let us take a very simple example. Imagine in one economy, only two products are sold. One of them is imported. Now, if the price of the import rises up, why does the price rise? Either rupee might have depreciated or the international price of the product could have increased. Multiple reasons. I will repeat it. Either rupee might have depreciated, right? Or what could have happened with respect to the international price of the product? The international price of the product could have increased. In either of the cases or in both of the cases, the imports will become costlier, and when the imports price will increase, obviously the market prices in India, that is in the domestic market, will increase, causing inflation. This is the basic idea of imported inflation. This is the basic idea of imported inflation. Done? Now, what of the or which of the following might cause imported inflation? Let us try and understand. Depreciation of the rupee against the dollar. Will it cause imported inflation? Of course, yes. It will cause imported inflation. Sir, how? Can you give me an example? Let us take an example. Imagine today $1 is equal to 50 rupees. Just a hypothetical number, it is much higher than that. I know, don't worry. Imagine $1 is equal to 50 rupees. You will import this particular marker, and let us say hypothetically the cost of the marker is $1. So, you will import it. How much money you will have to pay? 50 rupees. Rupee will depreciate. Now, the value is $1 is equal to 60 rupees. Rupee has depreciated. Now, because the rupee has depreciated, you will have to pay more money to import the same product. That will increase the market price, cause imported inflation. Second, rise in the international crude oil prices. Current affairs. In the recent times, you must have seen crude oil prices have started shooting upwards in the prices have started shooting upwards in the international market. And because India, like always, it depends about 85% of the demand in case of India, we are dependent on the imports. Any rise in the international prices of the crude oil, it will basically cause the imported inflation. So, first one is correct, second one is correct. What about the third one? Rising exports. First and foremost, when the exports will happen from India, please understand this. You will export the goods, you will earn in dollars. So, you will bring in dollars into India. You cannot use the dollars in the domestic market, you will get them exchanged. You will convert these particular dollars into rupees, get the rupees purchased from the forex market. But in the process, what is actually the outcome? What is the result of this? You will demand more rupees from the market, and when you demand more rupees, the rupee will start getting appreciated. Rupee will become appreciated, and when rupee appreciates, what will happen to imports? Imports become cheaper. With rupee appreciation, imports will become cheaper. So, rising exports, no, that will not cause imported inflation. This is wrong. So, 1 and 2 are correct. Right option will be option B here. Let's go to the next question. The divergence between CPI and WPI in India is because of, first and foremost, what do you mean by divergence here? For example, take the current data, you will realize it. WPI is around 14%. CPI is around 6%. Couple of months ago, WPI was 13%. CPI was just a notch below 6%. Some years ago, CPI was around 5%, WPI was minus 1%. So generally what we see in case of India is CPI and WPI, one will not move always in the same direction. One might be moving upwards, one might be moving downwards also. Let me show a graph so that you understand. Have a look at the graph here. Please do not mug up this particular graph. What you will see is, one, that is the red line is CPI and the black dotted line is a WPI. Is there any pattern that you can observe here? Any pattern that you can observe? Right? Any pattern where you can establish that this is exactly how both are moving? Absolutely no pattern. CPI sometimes moves upwards, WPI crashes. WPI moves upwards, CPI crashes, CPI goes down. CPI sometimes is higher, WPI is negative. No pattern can be found here. And by the way, have a look at this also. What about a trend based question here? For example, UPSC might ask you in the prelims, in the last 3 years, CPI inflation rate always has been rising in case of India. That is, monthly inflation rate has always been rising. Can you find a rising pattern here? Increasing pattern always? Decreasing pattern? Absolutely no. Current situation is WPI is higher compared to CPI, but has it always been the same? Absolutely no. Right? So there is no fixed pattern in terms of a movement of both of them. This is called as a divergence. This is basically referred to as a divergence. So now the question is, why is there a divergence between both CPI as well as the WPI? Why both are moving in always different directions like this? Reasons, I have given 3 points here. The base year is different. The weightages of groups are different. The variations in the base effect. Which of the following are the causes of, or which of them are contributing to this divergence? By the way, all the 3 points are correct. All the 3 points contribute to the divergence between both of them. Sir, how? Base year for CPI is 2012. Base year for CPI is 2012. What about WPI? It is 2011 and 2012. And this is also there in the newspaper. We want to change the base year of WPI now. Right? We want to change the base year of WPI. So base year for both of them are different. In case of WPI, if you look at the groups, right, how many items are there? How many commodities are there? 697 divided into 3 groups. Highest weightage has been given for manufacturing. If you look at CPI divided into 6 groups, the CPI overall has 299 items, goods as well as services divided into 6 groups. Highest weightage has been given for food and beverages, 45.86%. So the coverage is different for both of them. Base year is different. Weightages of the groups are different. And finally, variations in the base effect. Right? What is the meaning of this particular term, base effect? Understand this very carefully. Whenever you talk about inflation rates like this, for example, if you come across, let's say, April, right, inflation rate, or inflation rate for the month of March, February, what are they trying to say is very simply, compared to the same month in the last year, price levels have increased by this much. And because under WPI we are looking at wholesale market, and under CPI we are looking at retail market, price levels could be completely different in both of these markets. And when we are comparing with a base, that is, let's say, April of 2022 with April of 2021, what if in the base the wholesale market had crashed? Wholesale market prices were very, very low. And today, even if the wholesale market prices have come to normal, because the base is very, very low, don't you think it will have an impact on what inflation rate you will get? So the divergence between CPI and WPI can also be caused because of variations in the base effect on both of them. So all the 3 points are correct. By the way, the right option for this particular question will be option D here. Option D is the right option for this particular question. Done. So this is a discussion related to CPI as well as WPI divergence. Let me go to the next one. Consider the following statements. Government has decided to continue with an inflation target of 4% for 2021 26. Inflation targeted is core inflation. The government has earlier amended RBI Act of 1934 to introduce inflation targeting. Right? What do you mean by all the three statements? Let's go one by one. Government has decided to continue with an inflation target of 4% for 21 to 26. Now the basic idea is, I'm pretty sure you have come across the concept of MPFA, Monetary Policy Framework Agreement. MPFA was signed in 2015, has come into force from 2016. Under this, for a period of 5 years, Government of India, after consultations with RBI, will fix an inflation target for RBI. And what is this particular inflation that I am talking of? We will focus on headline CPI. Remember this. We will focus on headline CPI inflation, not core, headline CPI inflation. And in the last 1 year, there has been a lot of discussion related to this. Should we focus on headline CPI or should we focus on core CPI? RBI has stuck with headline CPI, remember this. So we will focus on headline CPI, and what is the inflation target? 4%. 4% is the inflation target, plus or minus 2%. In simple terms, the highest rate of inflation that RBI can allow the economy to hit is 6%, lowest level will be 2%. And by the way, understand my statement here, just try to find out. The term RBI, is it mentioned in the Constitution of India? Because we keep on discussing RBI so much. What do you think? What do you think? Is RBI mentioned in the Constitution of India? Just try to find out the answer. Just try to find out the answer. Come back to this. 4% plus or minus 2%. That is the inflation target for Reserve Bank of India. Now I said this is decided for a period of 5 years. So it has come into force from 2016. 5 years from 2016 will be how much? 2021. So 5 years are over. Now next 5 years, that is from 2021 to 2026. What is the inflation target? Government of India has decided we will go with the same rate of inflation target, that is 4%. We will continue with the same rate of inflation target, we will not change it. Done. So these are some of the very important points. Government has decided to continue with an inflation target of 4% for 21 to 26. Statement is correct. The inflation targeted is core inflation. Statement is wrong. The government has earlier amended RBI Act of 1934 to introduce inflation targeting. Yes, statement is true. Why? Simple reason. The RBI derives its powers, right? The appointment of RBI governor, the functions of RBI, all of these are from the Reserve Bank of India Act of 1934. So now Government of India is telling RBI, maintain inflation target at 4%. If you want to tell RBI to do that, first you will have to amend the RBI Act. So has Government of India amended RBI Act for this? Yes, it has been done. So third statement is correct, first one is correct. Right option for this question will be option B, 1 and 3. Next question. Consider the following which may cause cost push inflation. Right? Consider following which might cause a cost push inflation. Now whenever you discuss the concept of inflation, remember this. Inflation can be caused either because of supply side factors. Inflation may be caused because of supply side factors, or inflation may be caused because of demand side factors. If the demand side factors contribute to inflation, the technical term they use is a demand pull inflation. They will use the term demand pull inflation. And whenever the supply side factors will contribute to inflation, they use the term cost push inflation. Cost push inflation. Now whenever these kind of questions are asked in UPSC, and they generally ask these kind of questions in UPSC prelims, you need to identify, if they are talking about, let's say, cost push, you need to identify which of the factors are going to contribute to the supply side in the economy. If they are talking about, let's say, demand pull inflation, You need to find out which of the factors are contributing to the demand in the economy. For example, if the people's income keep on increasing, if all of us start earning more and more, can I simply say that with our earnings increasing, we will have more money to spend in the market? And when we have more money to spend in the market, obviously the aggregate demand, total demand will start increasing. And on the other hand, sir, example of a cost push inflation. Example, many examples are there. Let me take one example. What if the agriculture sector suffers from excess rainfall? We are around the monsoon season now, we will move towards the monsoon season. What if there is an excess rainfall in the current year? As a result of this, production of agriculture sector is affected. Again, hypothetical situation. Right? Don't say that, sir, you are anti-national. Hypothetical situation. In that case, don't you think supply would get disrupted? If supply gets disrupted, obviously the market prices will start increasing, but more importantly, because there is a supply side, it's a cost push inflation. So whenever these kind of questions are asked, these are the favorites of UPSC. You need to find out whether these are the demand side factors or cost side factors. Let's start. Consider the following which may cause cost push inflation in the economy. Expansionary monetary policy, right? Whenever you are talking about expansionary monetary policy, remember this, the monetary policy can be used either to increase the demand or decrease the demand. I'll repeat my statement. The monetary policy can be used either to increase the demand or decrease the demand. And that is the reason we say that generally RBI doesn't have all the tools at its disposal to control all the types of inflation in the Indian economy. So what do you mean by that? What if the inflation is being caused because of vegetables? What if the inflation is being caused because of pulses, because of the crude oil, etc.? Do you think RBI is equipped enough? RBI has tools to control these kind of inflation? Absolutely no. So RBI plays a very, very important role in controlling inflation, no doubt, but RBI has more say, RBI has more power to control demand in the market through its credit control policies. So expansionary monetary policy talks about demand side in the economy, but the question is on the cost side. First one is wrong. Rising crude prices in the global market. If the crude prices increase, some of you might be thinking, sir, you are talking about India, but this is rising crude prices in the international market. Will it have an impact? Of course, yes. Whenever the crude oil prices will increase in the international market, imports into India will become costlier. The fuel that we purchase in the market, that is petrol and diesel, etc., will become costlier. That will contribute to cost push inflation. 2 is correct. Third, rising commodity prices. Again, this was also there in the newspaper. The argument here was very simple. After pandemic, there is a sudden surge for the demand for the commodities in the global market. Sudden surge has happened. What kind of commodities? Steel. Best example. Steel is the best example for this. Because the recovery is happening across various countries in the global market, everybody wants to purchase more and more steel. The demand has suddenly risen up. We are unable to meet that particular demand as such. So the market prices are actually increasing. Now what is the problem in case of India? We import them. We import these particular commodities. So when we import it, at higher prices, we manufacture certain goods. Obviously the market prices of the goods will also be higher. When the market price of the goods will increase, what will happen to the inflation rate? Inflation rate will be caused. But more importantly, this is because of supply side factor. So third one, correct. Fourth one, positive supply shock. Positive supply shock, a tricky term, very much tricky term. Why? I'll tell you. First and foremost, to start with the basic idea of a supply shock. What do you mean by supply shock? Any sudden change in the supply, is called as a supply shock. Now this particular sudden change could be a positive change, that is thus because of the sudden change the supply will increase, or it could be a negative supply shock. Negative means because of the sudden change supply to the market will come down. So understand this very carefully. When I say negative supply shock, supply to the market will come down, and when the supply to the market will come down, market prices will start increasing, right? Demand is higher, market prices will start increasing. And on the other hand, positive supply shock means what? Right, the supply will start increasing, right, the market prices will not change by much. Now have a look at this. When the positive supply shock will take place, supply suddenly rises up in the market, market prices, right, just make correction here, when the supply suddenly increases like this, market prices will start coming down. Earlier I said it doesn't change, but if the supply suddenly increases, market prices will start coming down like this. And when the market prices will come down, right, it will not cause inflation. Whereas if it is a negative supply shock, supply will come down, demand is there, prices will start increasing, right. So positive supply shock will reduce market prices, it will not contribute to inflation. So fourth one is wrong. Again, please be very careful, because this is a positive supply shock, I am saying this is wrong. So second and third are correct. Right option for this question will be right option B, that is 2 and 3. Next question. Which of the following may cause demand pull inflation? Right, nothing much to discuss here because we already understood what do you mean by demand pull inflation. Let's directly jump into evaluation here. Disruption in the agriculture production. Whenever there is a disruption in the agriculture production, what will happen? Right, imagine the pulses production is brought down, the cereal production is actually reduced, the vegetable production is reduced, for whatever reason it is, production has been brought down and it has come down. And when the production comes down, what generally happens? Right, the market prices will start rising upwards. It will contribute to inflation, no doubt. Disruption in the agriculture production will contribute to inflation. Let me add it to current affairs. Lemon, nimbu, right, in the last couple of months if you have purchased a lemon or nimbu, you will realize it. At one point of time, a nimbu was being sold at 10 rupee per unit, 12 rupee per unit. Never ever in my lifetime I have ever seen a nimbu being sold at 10 rupee or 12 rupee. But because of the disruption, because of the various factors, market prices have increased. Onion, many of the times you will look at it, right, because there is a, let's say, unseasonal rainfall, production of onion is affected, supply becomes lower, market prices will increase. But more importantly, this is a supply side factor. Remember this, this is a supply side factor, not a demand side factor. So inflation will be caused, but it is not a reason for demand pull inflation, it is a cost push inflation. Inflation expectations, right, what do you mean by inflation expectations here? RBI basically conducts a survey which is called as a expectations survey, inflation expectation survey. Argument of inflation expectations is that if you ask me how the inflation is expected to move in the next couple of months, that is, what is my feeling, how inflation will move in the coming days in the economy, will it have an impact on inflation? Of course yes, understand this, right. I know it looks confusing here. Sir, you are saying under inflation expectations we are trying to gauge what is my estimate regarding movement of inflation rate. But you are simply saying that will also have an impact on inflation. How? For example, now I have looked at, let's say, the onion prices, nimbu prices. What if my inflation expectation is in the coming days the prices are going to further increase? The prices of these commodities are going to further increase in the market. In that situation, what will I do? Right, I will go for damage control now itself. Although it is being sold at 8 rupee per unit, I will purchase more so that I don't have to purchase when it will become, let's say, 15 rupees or 14 rupees. That is my inflation expectation. So whenever the inflation expectation is very high, that is, the consumers feel that the inflation is going to increase in the coming days, they will increase the demand currently. They will increase the demand, start demanding more and more goods and services, overall demand rises up, it will contribute to demand pull inflation. Second one is correct. Third one, rising incomes of the households. Right, imagine you are the person here, you are earning 1 lakh rupees per month now. Now go, right, let's say, right, the company which is which has hired you, they are very happy with the work as such. Although you work for last 2 years from home itself, they are very happy with your work. So they will say, we want to increase your income from 1 lakh rupees, we will increase it to 1.3 lakh rupees. So they are giving you more salary, And when they will give you more salary, what will happen to your expenditures? Expenditures will increase. And when expenditures increases, what will happen to overall demand? Rises up. What will happen to inflation? Rises up. So rising incomes of the households will also contribute to demand pull inflation. So 2 and 3 are correct. Right option is option C for this particular question. Next one, consider the following statements, right? Slightly tricky. I've tried to integrate two economies now, India and USA. Why? Inflation is not just a problem for India, it is also a problem for USA. And if you have been reading the newspapers, you will know this. Even in USA, inflation is a bigger concern for the government as well as the Federal Reserve now. And that is the precise reason. Last month, right, or let's say a couple of weeks ago, the Federal Reserve has announced that they will increase the federal funds rate. Right, so have a look at the statements here. Consider the following statements. Both US and Indian central bankers have set an inflation target. What do you think? Right, have both set an inflation target? Yes, statement is true. Both have set 6% as inflation target. Now this becomes much more tricky. Sir, I have not read about US's Federal Reserve policy. Right, so understand, correct, first statement is correct. Second statement is wrong. Why? In case of India, we have set an inflation target of 4%. In case of India, we have set up an inflation target of 4%. Sir, what about Federal Reserve? They have a target of 2%. Right, so as such, if you know about India's target, you will come to a conclusion. But now the question is, what if they will give this as a 4? Now some of you will simply look at it and say, sir, very easy statement, very easy, 6, and just now a couple of slides ago you told it is 4%, I will mark it as wrong. What if UPSC will play a trick with you, throw a googly at you, 4%, right? So in that particular case, what you will do? That is the reason. So in case of USA, 2%, India, 4%. So second statement is wrong, first one is correct. So right option for this question will be option A, only one is correct. Let me go to the next question. Which of the following may cause stagflation? This is also there in the current affairs. In the context of USA, they are discussing this. In the context of India, they are discussing the idea of a stagflation now. Stagflation simply is a combination of two terms, stagnant and inflation. Stagnant and inflation. And in stagflation, that is this particular situation, what is observed? Right, the observation is very simple. Generally, what you find is this. Right, have a look at this. Generally, what you find is a country with higher growth rate. A country with higher growth rate generally experiences higher inflation rate. I will repeat the statement here. There is a very close linkage between the growth rate as well as the inflation rate. We say that if the growth rate is happening, if the GDP growth rate is very fast, there is always a concern about inflation rate. In fact, in UPSC mains, once this question has been asked, right, the paraphrasing, and I am just paraphrasing the question here. The UPSC asked, do you think the situation of the stagnant growth as well as the moderate inflation rate has left the Indian economy in a very good shape? Elaborate. So whenever you discuss the concept of high GDP growth rate, it is always accompanied at Jai Viru type, at Sholay, it is always accompanied with inflation rate. Logic is simple here. Higher growth rate means households are earning more salaries. Production is more, employment is more, households are earning more salaries. And why do you think companies are producing more? Because the demand is there in the market. So inflation rate is generally accompanying the idea of a growth rate. But in the context of stagflation, that is the beauty of this idea. In the context of stagflation, what you generally observe is inflation rate will continue to rise. Inflation rate will continue to rise. But what about the growth rate? Growth rate becomes stagnant. The growth rate becomes stagnant or starts reducing, slowdown, recession, etc. But along with both of them, stagnant growth rate, increasing inflation rate, there is one more feature of an stagflation, that is higher unemployment rate. Higher unemployment rate. So any country that experiences a rising unemployment rate, a higher inflation rate and a stagnant growth rate basically is said to be passing through the situation or the phase of stagflation. Now USA, couple of months ago, basically this was being discussed. India, last year, this particular situation was being discussed. In fact, it was the former Prime Minister Mr. Manmohan Singh who stated that Indian economy is passing through the phase of stagflation. So what is the argument here? Growth rate has got stagnated, unemployment rate is rising up, it is increasing, and inflation rate is also increasing. This phase in the economy is referred to as stagflation. Now, have a look at the question. Which of the following may cause stagflation? Expansionary monetary policy, supply shock, expansionary fiscal policy. All the three are correct. Sir, argument. What is the logical argument here? Imagine, right, understand the situation here. Imagine a particular country is going through a very bad phase. Growth rate is almost nil, right, very low in fact. So at that particular point of time, both the central bank as well as the government will follow a policy of expansionary monetary and expansionary fiscal policy respectively. The central bank will reduce the interest rates, make it very easier to get loans in the market, money supply increases, and the central government will also increase money supply, gives more welfare payments to the people, gives more subsidies to the people, provides income support to the sections of the society such as farmers, etc. So have a look at this. Because of expansionary monetary policy and expansionary fiscal policy, everybody has money now. All of us have money, right? Just an imagination, right? It is right now I cannot say there is a stagflation because there is a very good recovery in the Indian economy. So imagine we are there in that situation. So all of us have money, we want to purchase goods and services, but because of a supply shock, what if there is no supply or very low supply of goods and services? Because of a supply shock, what if the supply of goods and services is very low? So demand is very high, supply is very less. When supply is very less, what do you think will happen to growth rate? Growth rate will not increase, it will suffer, right? What if the supply is very less, what about the unemployment rate? Do you think people will be hired more when companies are not supplying? Obviously no, they will remove people. But on the other hand, people are demanding goods and services. All of them have money. Inflation will increase. So unemployment rate increasing, inflation rate increasing. What about the growth? Growth is faltering. Growth is actually reducing. That is the perfect recipe of a disaster, that is stagflation. So all the 3 points are correct. All the three, right, can cause stagflation. So right option for this particular question will be option D. Option D will be the right option for this particular question. Let me go to the next question now. Which of the following provides most comprehensive measure of inflation in the economy? Which of the following provides the most comprehensive measure of inflation in the economy? Understand my statement very carefully. Most comprehensive. Which type of inflation rate are we measuring in case of India? We are measuring CPI, we are measuring WPI. Which type of inflation are we using for policy making? CPI, right? They will simply use a statement, CPI is used as a nominal anchor. CPI is used as a nominal anchor. What do you mean by this? Whenever the monetary policy has to take a decision either to increase repo rate or decrease repo rate, what are they actually looking at? They are looking at CPI inflation rate. But please understand this, although we are using CPI, CPI doesn't give us the best measure of inflation in the economy. It is not the most comprehensive measure of inflation in the economy. Then what is the answer for this? WPI? No. WPI also doesn't give you a comprehensive measure. Why? In case of WPI, look at the composition, you will realize services are not included. Services are not there under WPI. In CPI, services are there, but the coverage is very narrow compared to WPI. So which is the better indicator then? Which is the most comprehensive indicator? Answer is GDP deflator. Answer is GDP deflator. Remember this. The right answer to this particular question is GDP deflator. What is a GDP deflator? GDP deflator is basically a ratio. GDP deflator basically is a ratio of what is the market price of goods and services considering the current market prices divided by what is the market price of goods and services produced in an economy considering constant prices. What is the constant price? That is a base year price. Use it to calculate GDP, that is called as real GDP. And whatever is the current market price, use it to calculate a GDP which is called as a nominal GDP. Now some of you will simply say, sir, you are wrong. It is not real and nominal. It is in fact GDP at constant prices, GDP at current prices. That is another name for it. Another name is, this is called as GDP at constant prices. This is called as GDP at the current prices. And rather than using such a big statement, nominal and a real GDP. Now have a look at this. Whenever you talk about WPI, coverage is 697 articles. Services excluded. If you talk about CPI, 299. Overall I am talking, right? Overall headline, right? Remember this. In case of CPI, there is a CPI rural, CPI urban and a CPI overall. CPI combined or overall. Do not be confused with all of them. CPI rural has 448 articles, goods and services both. CPI urban has 460, goods and services both. CPI combined has 299, goods and services both. And whenever you come across this particular number, CPI, they will simply say retail inflation is this much. This is the number they are talking of. This is the number they are talking about, CPI combined. So in case of CPI combined, 299, narrow coverage. Right, the problem is that is the reason, have a look at this. GDP deflator is a very comprehensive measure of inflation. Why do we call it as a comprehensive measure of inflation? If you calculate GDP, what is GDP? Gross domestic product. I am pretty sure all of you have mugged it up by now. GDP means automatically your lips will start moving. Gross domestic product, sir. Right, so in case of GDP, how do we measure it? Consider all the goods and services which are produced in India, get the market prices of it, that will give you GDP number. So you calculate GDP, and when you calculate GDP, you will consider all the goods and services which are produced in India. And when you compare nominal GDP and real GDP like this, you are calculating GDP taking constant prices in a base year, current market prices. So basically what you are doing is, you are comparing by how much percentage the price levels have increased in the market. I will repeat it. You are calculating GDP using constant base year prices and the current market prices. So when you take different prices like this, what you are doing is you are measuring by how much percentage the price levels have increased over a period of time. And if you measure the price level rise, that is nothing but inflation. So which is the most comprehensive measure of inflation? It is a GDP deflator. It is the GDP deflator which is the most comprehensive measure of inflation. By the way, there is one more here, CPI IW, and I want you to do certain homework. What is the CPI IW? What is the importance of CPI IW? Try to find it out. Last couple of months it was there in the newspaper. Last year the base year was changed, combination was changed, composition was changed. UPSC has not touched this so far. UPSC has not touched this. Please be very careful. CPI industrial workers. Done? So the right option to this particular question is option D, GDP deflator. Now some of you will start scratching your head. Sir, if GDP deflator is most comprehensive, why are we not using it then? Why are we simply running behind CPI? Please understand, to calculate GDP deflator, you need GDP. All of you will agree? If you want to calculate GDP deflator, you require GDP first. Do you think on monthly basis we calculate GDP in India? What do you think? What is the frequency of calculation of GDP in India? Quarterly. We calculate GDP for a quarter like this. Whereas CPI and WPI is calculated monthly. For every month we have CPI and WPI. That is the precise reason, because this is calculated quarterly, by the way, by NSO, Minister of Statistics of Program Implementation. WPI is used as a GDP deflator in India. Remember this. because we calculate this quarterly, right, it is not available on monthly basis, we use WPI as a GDP deflator in India. But anyways, which is the most comprehensive? GDP deflator, right? Right option for this question is option D. Next question. Consider the following statements. Consider the following statements regarding Taxation Laws Amendment Act of 2021. Now, some of you look at it and say, sir, very difficult question. From which corner of economy have you picked up this particular question? If I tell you the background, then you will raise your hand and say, oh, this is the area. This is related to concept of retrospective taxation. Retrospective taxation. And for UPSC, both prelims as well as mains, the concept of retrospective taxation becomes very, very important. What is the basic idea for retrospective taxation? Government of India introduced a tax, or let's say basically covered certain transactions, introduced a tax on that, but implemented this from a past date. Retrospectively means from earlier date the implementation was actually brought in. Sir, what do you mean by this? Let me take a very simple example so that you understand. Imagine you will have your annual review, right? Increment, you are expecting increment, you have your annual review. You are supposed to get the review done in the month of January, that is your joining date, January. But because the offices were not open, etc., etc., now you are going back to office, your manager will conduct your review in the month of April. But the manager simply says, don't worry, your review was supposed to be done in the month of January. So we will revise your salary. Yes, we are going to revise it now, but it will become effective from 1st of January itself. So whatever salary you have not been able to earn for the month of January, February, March, April, etc., all of those arrears will be provided to you. This is a classic application of concept of retrospective. Now what is the idea here? There are many multinational enterprises, multinational corporations, which basically practice or have a accounting practice wherein they will simply transfer the ownership of the assets which are there in India in an indirect way. I will repeat my statement here. Right, the argument was very simple. Government of India says that there are certain multinational corporations or big companies which are selling the assets that they own in India in a foreign market, but in an indirect way. So indirect transfer of Indian assets would be targeted under the retrospective taxation law. Right, you don't have to mug up the whole story now. Right, the best classic case related to retrospective taxation is Vodafone retrospective taxation. Vodafone went to, right, the bilateral investment treaty, that is international arbitration, right, and the international arbitration ruled in the favor of Vodafone, right, and again in addition to this there are many other cases also. Now Government of India, because they started losing and realized, okay, right, it is actually damaging the image of Indian economy, decided that they will simply withdraw this particular retrospective law. I will repeat my statement. Decided that they will simply withdraw this particular retrospective taxation law. So whatever tax notices or tax demands were sent by the government, right, Government of India said we will withdraw these particular tax notices. But there are various conditions attached to this. Right, follow this very carefully. Those tax notices which have been sent after certain date in 2012, those notices will remain valid. Understand my statement here? Under this particular amendment to section 9 of Income Tax Act of 1961, this is what Government of India says. Those particular tax notices which have been sent after certain date in 2012, that is 28th May of 2012, because the law got the signature of the President on that day, they will remain valid. They will simply remain valid. But if these particular tax notices were basically sent to those companies, the transaction which had taken place earlier, right, if you are going to have an indirect transfer of assets after 2012, government will send the notices to you. No issues, they will send the notices, they will collect the taxes from you. But imagine you have had an indirect transfer of the assets or sale of the asset before 2012 and you are covered under the concept of retrospective taxation law, only those notices would be withdrawn by the government. right? And that provision was introduced with amendment to section 9 of Act of 1961. So first statement, it is true. All the tax demands involving the indirect transfer of Indian assets have been withdrawn. Very tricky statement. Why this is wrong? Again, I'll repeat it, understand this. If you have indirectly transferred the assets that you own in India before 2012, they have sent a tax notice, they will withdraw it. But after 2012, you have indirectly transferred the assets that you own in India, they have sent a tax notice under this particular IT Act, it will remain valid today. Why? Please understand the logic here. The argument was because the transaction has happened before 2012 and in 2012 you brought in a law, this becomes a retrospective in nature. But the law was brought in 2012 and you have an indirect transfer of asset post 2012, it is not retrospective law, it is prospective law. So those particular demands will remain valid even today. So second statement is wrong, first one is correct. Right option for this particular question will be option 1, right? Option A, only one is correct. Done? So this is one more very tricky statement or very difficult question as far as I am concerned, but please be very, very careful with respect to these questions. Next question. Consider the following statements regarding inverted duty structure. Right? And I am pretty sure if you have been reading the newspaper, you have come across this particular term of inverted duty structure. What do you mean by inverted duty structure? And it was there in the current affairs, by the way. Imagine you are a manufacturer here. Let's start the circus now. Imagine you are a manufacturer here. You will purchase certain raw materials. You will manufacture the good, sell it in the market. Sell it in the market. But when you purchase the raw material, you will pay GST. And when you sell the good, you will collect GST, give it to government. And whatever GST you have paid, this raw material supplier will give it to government. And government says, when you collect GST and give it to me like this, I will credit back. Credit back means I have an account, right? Your account is there with me. I will credit back this particular amount of GST. And this basic idea is referred to as the concept of input tax credit. Input tax credit, ITC, input tax credit. And that is one of the defining features of the concept of GST. I will repeat it again. As a manufacturer, whenever you purchase raw materials, whatever GST you have paid, that will go to the government, but the government will credit back they will credit the amount back to you into your account once you collect the GST from the customer and give it to government. This concept is called as input tax credit mechanism. But the problem in case of inverted duty structure, understand this very carefully. Imagine you have purchased a raw material at 20 rupees. You paid 20 rupees GST. You purchased a raw material and you paid a GST of 20. Now you will sell the good in the market, you will collect, let's say, 12 rupee GST. You will sell the good, collect 12 rupee GST. So have a look at this. Whenever the tax on the raw materials is higher than the tax on the output, I'll repeat the statement. The tax that you pay on your input, that is raw material, is higher than the tax that you collect on the output. This is called as inverted duty structure. Inverted duty structure. And one of the problems with respect to GST is inverted duty structure. And in the last 1 year, Government of India has taken various reforms to address inverted duty structure. What is the problem with this structure? I'll give one simple problem here. Imagine you're a micro enterprise. Micro enterprise means what? Obviously, you do not have sufficient working capital. The money that is there with you is very, very less. You will pay GST of 20 rupees here. You will collect a GST of 12 rupee. So when you pay GST of 20 rupee, it goes to the government. Government will give it to you. They will transfer it in the form of credit into your account. But the problem here is, when you talk about GST, the taxes on the inputs should be lower than the taxes of output. So whatever taxes you have paid, that is 20 rupees, is more, right? It is higher. and this particular 20 rupee will get stuck up in the system like this. I'll repeat it. The precious working capital of the manufacturer now is there with the government. Government will transfer it. They will give credit into your account. Remember this, they will not give you cash directly. They will credit that into your account. And after certain reporting period is over, you can withdraw the cash like this. But for certain number of days like this, your precious working capital gets stuck up in the system. That is one of the biggest problem with respect to the idea of inverted duty structure. And apart from this, as usual, whenever there is an inverted duty structure here, government will start losing lot of revenues because of the inverted duty structure. So have a look at the question here. Consider the following statements regarding inverted duty structure. The duty on the inputs is higher than the duty on the output. Statement is correct. This will block the capital of the companies. That is also correct. So both the statements are correct. Right option is option C, both 1 and 2. Let me go to the next question now. Consider the following statements regarding National Anti-Profiteering Authority, NAA. Consider the following statements regarding National Anti-Profiteering Authority, NAA. Very important under GST. First and foremost, what do you mean by an NAA, National Anti-Profiteering Authority? It has been set up under section 171 of CGST Act. Remember this. Under section 171 of CGST Act, Central GST Act, this has been established. First point. Second very important point. What is the role of this authority? It aims to prevent, it will aim to reduce or prevent or prohibit the concept of profiteering. Profiteering under GST. Some of you will keep on scratching your head. Sir, what do you mean by profiteering? Very simple. Imagine I am selling this particular marker. Right now Government of India has imposed a GST of 10 rupee. 100 rupees my selling price, 10 rupees GST, I will sell it to you at 110. Government will reduce the price of the GST, or they will reduce the GST from 10 rupees to, let's say, 4 rupees. So government has reduced the GST by 6 rupees. But the market price of the marker, I will reduce it only by 3 rupees, from 110 to 107 rupees. So government simply says, I have reduced the GST by 6 rupees, right? But you have reduced your market price only by 3 rupee, which means you are pocketing more profit, you are earning more profit. This unreasonable excess of profit making is called as profiteering. I'll repeat the statement. This unreasonable excessive profit making is called as profiteering. And to prohibit profiteering, the activities of the companies, Government of India has proposed National Anti-Profiteering Authority under CGST Act as such. Now, when we set up this National Anti-Profiteering Authority back in the year 2017, we had a sunset clause of 2 years. Sunset clause of 2 years. Again, don't worry about the term sunset clause. It is as good as saying it is an expiry date for a provision. Right? Once the class is over, or it should be, or it could be there in front of you. Some of you could be drinking, right, let's say a packaged drinking water, or some of you could be drinking Coca-Cola, some of you could be eating chips, some of you could be eating biscuits right now. Just turn around, right, perfectly fine, right, don't worry about it. Just turn around or just rotate the pack like this. There is an expiry date. Best before date is provided on the packaging. What is the meaning? There is an expiry date for all the products. In the same way, there is a provision using which we have set up the National Anti-Profiteering Authority. But for how many years? This particular provision, that is the sunset clause, will tell you for how many years the authority will actually function. Initially, it was supposed to function only for 2 years. So in 2019, we were supposed to close it. 2019, again this was extended by 2 more years, 2021. In 2021, it was extended by 1 more year. So we are in 2022, by the way. Right, so in 2022, we expect that the National Anti-Profiteering Authority will be wound up, will be closed down. Sir, if it is closed down, who will conduct this particular profiteering, anti-profiteering activity then? Who will take care of all of this? Right now, expectation is that this function will be given up to Competition Commission of India. Again, it has not been announced, right? It is not confirmed. I am just giving you what is being talked about. They are simply saying we will close this, transfer the function of this to the Competition Commission of India. Now, have a look at the statements here. It functions under the Ministry of Corporate Affairs. What do you think so? Statement is wrong. It functions under Ministry of Finance. It functions under Ministry of Finance. It needs a quorum of chairman and 3 technical members. Statement is true. Why? This was also there in the newspaper. Look at the composition of National Anti-Profiteering Authority. 1 is the chairman, 4 are the technical members. 1 is the chairman and 4 are technical members. And as per the latest information, chairman is not there. Right? Earlier chairman was there, now there is no chairman in NAA. Out of 4 members, only 2 members are working. So, for all intents and purposes, NAA is not actually working now. Because remember this, for the National Anti-Profiteering Authority to actually function, what is the minimum requirement? What is the quorum within this particular, the NAA? 1 plus 3. You require the chairman, chairman should be there, and out of 4 members, 3 members should be there, technical members. But right now, what is the composition? Out of 1 plus 4, only 2 are there. So, that was also there in the newspaper. Please be very, very careful. So, second statement is true. It requires a quorum of chairman and 3 technical members. Right option for this particular question will be option B here. Let me go to the next question. Consider the following statements regarding GST Compensation Cess. GST Compensation Cess. If you have read the newspapers, this particular term has been thrown left and right in the last 6 to 8 months in the newspapers. States, especially non-BJP ruled states, the governments, right, the chief minister, the state finance minister or revenue minister, one after the other, they are giving statements against central government. They are demanding that the center extend the GST compensation period. So, this becomes very, very important for UPSC Prelims now. What is the basic idea of a GST compensation? Understand this. Earlier, right, I will come back to this. Earlier, before the implementation of GST, the states had their own rights to collect taxes. Schedule 7 of Indian Constitution, the taxation powers have been distributed. So, earlier the state governments had their own powers to impose and collect the tax revenues. But with the introduction of GST, what has happened? These particular taxes have been subsumed, have been taken under the ambit of GST. Now, individually a state government, can they decide a tax rate? Underline the term individually. Absolutely no. For example, imagine, right, you are the chief minister. Imagine, you will become very happy. Right, so imagine you are the chief minister. Earlier, before the implementation of GST, you used to impose a VAT of, let's say, 15% on the marker. Now, this marker is covered under GST and the GST rate is, let's say, 12%. Can you change the GST rate on this marker? Absolutely no. You can initiate a discussion. In the GST Council, decision will be taken with at least a 75% majority of the present and voting members. So, that is the argument here. So, when these particular powers were being taken away from the state governments like this, the states were concerned. What if we don't collect sufficient amount of revenues then? That is the precise reason the concept of compensation was introduced by the government. The idea of GST compensation was introduced and government said, we will assume that from 1 year to next year, the revenue that you collect under the GST will increase by 14%. Please remember all of this. From 1 year to next year, we will assume that your GST revenues will increase by, not GST revenues, your tax revenues will increase by 14%. Now, what if, right, understand this, what if you are supposed to collect as per this calculation? What if you are supposed to collect, let's say, 500 crore in 1 year, but you ended up collecting only 300 crore rupees under GST? Is that okay? Without being brought under GST, if I simply assume the numbers, you were supposed to earn 500 crore rupees. But because we have taken away the taxation powers from you, your GST revenue is only 300 crore. So the shortfall, the gap between both of them was 200 crore. 100% of this revenue shortfall would be provided in the form of GST compensation by the center to the states. And in fact, to provide the compensation, central government even introduced the compensation cess. Some of the goods which are covered under the slab of 28%, apart from paying 28% GST, they will also have to pay compensation cess now. So center said we will collect the cess, use it to pay for the states for the revenue shortfall. And this GST compensation was given to every state whichever experienced a revenue shortfall for every 2 months. Right? Once every 2 months, this compensation was paid by the center to the state. Done? Now when it was announced, right, when it was announced, government simply said we will provide it for a period of 5 years. When it was announced, government simply said we will provide it for a period of 5 years. So July, remember this particular watermark date, 1st July 2017. Sir, why this date is important? We implemented GST. We brought GST into force. So July to June, I can understand where I am going with this particular number now. July to June, 1 year. So 17, 18, 1 year, 19, 20. So you calculate it, you will realize that June 22 now. June 22, 5th year will be over. 5th year will be over. And once the 5 year is over, the center says, I will not provide GST compensation to the states. This is the argument of the central government. I will not provide it. First point. Second, states want this to be continued. Whether it will happen or not, you will have to wait and see. But more importantly, look at this very tricky statement. Even though after June 2022, government says, I will not provide compensation to the states, the GST compensation cess will continue to be implemented. I will repeat my statement here. Even though after June 2022, center says, I will not give the compensation to the states, the GST compensation cess will continue to be provided. Some of you will start thinking, sir, if they are not going to pay compensation to the states, why will the center collect it? Argument of the central government is, in the last 2 years, thanks to pandemic, blame it on pandemic now, everything will be on pandemic. Why did you not study? Sir, pandemic. Right? Why did you not attend the class? Sir, pandemic. Right? So, have a look at this. Thanks to pandemic, during that particular last two years, the amount of compensation that the center is supposed to pay to the states is more than amount of compensation cess it has collected. Have a look at the graph here. Don't mug up anything. Understand the concept. The amount of, the compensation cess they are supposed to pay is higher than the cess that they have collected. So what the center has done? It has borrowed. It has borrowed and paid the cess to the states. That is a compensation cess. So when the center has borrowed, it has to repay. That is the reason it is called as borrowing. Right? So center has to repay. So center says, I will continue to implement this particular GST compensation cess. I will use this to repay the loans. I will continue to implement it, but I will collect the money, use it to repay the loans that I have taken in the last 2 years. Now look at the statements. Consider the following statements regarding GST compensation cess. It has been extended till March 2026. Statement is correct. Remember this. Second, it means the states will continue to get the compensation under GST after June 2022. Right now, no. Right now the position is very clear. Very recently, last week also it was there in the newspaper. Government has said absolutely no. I will not give you this particular compensation after June 2022. So right option for this particular question will be option A. Only one is correct. Let me go to the next question now. Consider the following statements regarding Financial Inclusion Index. Consider the following statements regarding Financial Inclusion Index, FII. Right? Now, first and foremost, what is this FII? This is one of the indices which is published by Reserve Bank of India. Right? Please be very, very careful. This is an index which is published by Reserve Bank of India. Now, what is this particular basic concept here? I'll come back to this particular slide. The Reserve Bank of India from the last couple of years, every year in the month of July has started publishing this particular concept of Financial Inclusion Index. Financial Inclusion Index. And under the Financial Inclusion Index, remember this, there are three very important parameters that they are considering. Three very important parameters. One, access. Second one is usage. Third one is quality. UPSC might ask you these particular terminologies, or just to make you much more confused, he will ask you the weightages of these particular parameters. Usage has been allocated with 45% weightage, access 35% weightage, and the quality has been allocated at 20% weightage. And it doesn't end here. These three parameters again have been subdivided, again have been divided. Totally there are 97 indicators. Please remember this also. Totally there are 97 indicators, right? Totally under these three put together there are 97. I have given certain examples. Please glance through this. Please go through this. UPSC can pick up this. For example, bank branches, ATM numbers, banking correspondent. Here is a interesting question. When do you think the concept of banking correspondent was introduced in India? Right? In which year do you think the idea of a BC, banking correspondent, was introduced in India? These are some of the parameters under access. Under usage, remittances, insurance, credit. Under quality, consumer protection, financial literacy and grievance redressal. And please understand this one more very important point. Although this is an index, there is no base year for this index. There is no base year for this index. Please be very careful. There is absolutely no base year, which means RBI is not comparing the performance of this particular year with any other year. There is no base to compare with. So there is no base year, right? This is also an interesting point here. Why? Whenever you talk about indices, for example, GDP growth rate, it is an index, but there is a base year. If you talk about CPI, right, CPI IW has a base year, CPI combined has a base year, CPI urban rural has a base year, WPI has a base year, the ICI index of 8 core industries has a base year, IIP index of industrial production has a base year. So whenever you talk about indices like this, there is always a concept of base year, but this Financial Inclusion Index does not have a base year. Please remember this very carefully. So what has been the performance of Indian economy in terms of these particular parameters? I have given the information. Please do not mug it. For example, a trend based question can be asked like this. A trend based question can be asked like this. Look at my statement here. As per the Financial Inclusion Index published annually by Reserve Bank of India, the performance of Indian economy under this parameter overall has been increasing or has been improving, because please understand this, the numbers are allocated in a scale of 0 to 100, numbers are allocated under all these parameters as well as cumulatively, which simply indicates that lower the number you get, that is nearer to 0 you get, you are having a worst performance, very bad performance. Nearer to 0 you get, you are improving in terms of financial inclusion parameters. So has India's performance under this particular index improved? Has it improved over a period of time? Of course yes, have a look at the numbers, you will realize. This is a kind of a probable question which UPSC, just to make it very difficult, because generally we don't cover all of these in the let's say the textbook as such. So UPSC, just to make the question difficult, can ask you these kind of questions. Now, what question have I asked here? Let's start. 1718 has been taken as the base year for the index, right? 1718 has been taken as a base year for the index. Is it true? No, there is no base year for this. Remember this. It was recommended by National Strategy for Financial Inclusion. This is a factual based information. Statement is true. Now it is your duty to just glance through this particular concept of National Strategy for Financial Inclusion. So far UPSC has not asked a question on this. Please be very careful. Done. So based on this analysis, The right option will be option B, only 2 is correct. Let me go to the next article or next question now. Consider the following statements regarding PIRP. Right, what is PIRP here? Pre-pack Insolvency Resolution Process. Pre-pack Insolvency Resolution Process. Resolution Process. Done. Now, what is this pre-pack Insolvency Resolution Process? Let's start. Whenever you talk about insolvency resolution process, understand this. Whenever you talk about insolvency resolution process, that is corporate insolvency resolution process is very simple. The borrower or creditor will go to NCLT, file an application. Then there is appointment of insolvency professional. This insolvency professional will collect the information from information utilities regarding this particular company. Submit all of this information to committee of creditors. But more importantly, understand this next point. Whenever the insolvency professional is appointed, he will overtake the management of the company. The management of the company, that particular power will be given to insolvency professional. For example, right, let's make it much more interesting. I am owning a company, I have taken loans from banks, I have defaulted on it. And many of the students will say, yes sir, you look dangerous, so you might have defaulted, right? I think you are a defaulter. And let's assume you are correct, right? Let's assume hypothetically. So you are correct, I have defaulted on the loan. And on the other side of the table, you are the insolvency professional. You are the expert now. So once you are appointed as an insolvency professional, what you will do is, you will ask me not to come to office, not to be involved in any decision making of the company. So the management function will be taken away from the owner and it will be managed by insolvency professional. Remember this. Next, the committee of creditors will take the decision and they will convey the decision to National Company Law Tribunal, which will issue the order. This is a basic process. Now here also important current affairs points are there. Please remember this. Earlier, for the process of insolvency resolution, Government of India recommended it to be conducted in 270 days. Government of India said conduct the insolvency resolution within 270 days. This has been changed to 330 days now. This has been changed to 330 days. Please be very, very careful. I told you one more term here, information utility, IU, information utility. There is only one information utility in India, National E-Governance Services Limited, NESL, National E-Governance Services Limited. Even this was there in the newspaper very, very recently. Done? Right? So these are some of the important points. This is how corporate insolvency resolution process will be conducted. What about the pre-pack insolvency resolution process, PIRP? Pre-pack insolvency resolution process, what is the basic idea? In case of pre-pack insolvency resolution process, here is a borrower, here is the borrower or the defaulter or the owner, call it whatever you want, and here is a creditor. Here is a creditor and much more importantly a financial creditor. So both the borrower as well as the financial creditors will enter into a contract or an agreement. They will enter into a contract or an agreement wherein, right, basically they will say that we will conduct the resolution, but, right, understand this, the ownership will not be taken away from the borrower. They are going to enter into a contract or an agreement. The borrower says, I will repay it. Let's restructure, right, I will repay it. But the argument here is, this particular, the borrower ownership will not be taken away immediately like this. So before going to insolvency resolution process like this, there is a pre-pack. Pre-pack means there is a pre-written agreement between the borrower as well as the creditors, that is the financial creditor, wherein at least 67% of the financial creditors will have to approve this particular plan. Such agreement is called as a pre-packed insolvency resolution process. And the advantage here is the company, the proprietor or the owner of the company will not lose the ownership here. They will basically propose this or give it to NCLT. NCLT will have to approve this, and right after this the resolution process will be implemented. And for the whole process to be conducted, the time period that has been prescribed is 120 days. 120 days. Right. So this is the basic idea of pre-pack insolvency resolution process, PIRP. Now look at the statements. Under this, the company is managed by resolution professional under PIRP. Right, if you look at this particular picture, have I written resolution professional anywhere? That is insolvency professional anywhere here? Absolutely no. Statement 1 is wrong. Under CIRP, that is the corporate insolvency resolution process, there is a transfer like this, but under PIRP, no. The time period prescribed is 120 days. Statement is correct. Right option for this question will be option B, only 2 is correct. Let me go to the next question now. Consider the following statements. Consider the following statements. Unified Presentment Management System UPMS has been developed by NBBL. Unified Presentment Management System has been developed by NBBL. Right. Second, NBBL is a subsidiary of NPCI. All the statements are correct, by the way. NPCI is a Section 8 company under CA 2013. Let's start. First and foremost, what do you mean by Unified Presentment Management System, UPMS? It is basically a system which has been set up by NBBL, that is NPCI Bharat Bill Limited, wherein, understand this, whatever payments you are supposed to do, the system will retrieve all the bills, show it to you for your action. I'll repeat my statement here. Under this, whatever payments, recurring payments, more importantly, recurring payments, for example, credit card dues, electricity bills, right, or let's say mutual fund investments or insurance payments, recurringly you are making payment. So under this particular UPMS, the system will fetch these particular bills from, let's say, the service providers, and they'll basically show it to you. You can set up a standing instruction, the payment can be done automatically to the service provider. That is provided under the concept of Unified Presentment Management System. Done? So first statement, UPMS has been developed by NBBL, right? The statement is correct. NBBL is a subsidiary of National Payment Corporation of India. That is also correct. Third one, NPCI is a Section 8 company under Companies Act of 2013. Now this is a very technical statement. Generally you will come across this. Section 8 company, that is one, or else you will come across one more term, Section 25 company. So understand this very carefully. Whenever they are talking about Section 8 company, they would be referring to Companies Act of 2013, and whenever they are talking about Section 25 company, they would be referring to Companies Act of 1956. But either it is 1956, 2013, Section 8 or Section 5. What is the importance? These kind of companies which are registered under the Companies Act do not generate profit for the purpose of distribution to the owners. I will repeat my statement here. Right? What is this idea of a Section 8 company or Section 25 company? These are the companies which are registered under the Companies Act. They do not generate profit for the purposes of distribution amongst the owners. That is, these entities will generate profit but will not give the profit to the owner. For example, a trust, charitable organization, etc. These are registered. These are in fact registered under Section 8 of the Companies Act. Whatever is the profit, profits are not distributed to the owners. Profit will be again invested back into the system. Sir, any relevant example of a Section 8 company, right? Remember this, there is an authority called as GST network. There is an authority which has been set up by Government of India, GST network. This GST network has been established as Section 8 company itself. Is it okay? Under Government of India, very important also under GST. The GST network, which is an authority which will provide the infrastructure backbone to the whole idea of a GST. For example, registration, filing of returns, etc. For all of this, GST network plays a very important role. And this GST network has been set up as Section 8 company under the Companies Act of 2013. Done? So, NPCI is a Section 8 company under CA 2013 statement is true. It is also a Section 8 company. Right? So, 1, 2 and 3 are correct. Right option is option D here. Let me go to the next question now. Consider the following statements. Consider the following statements. RBI is empowered to appoint staff in the banks under Banking Regulation Act. Sir, statements are very, very difficult. Yes, these are difficult. I'll connect it to current affairs so that you understand. There is a bank in India called as RBL Bank. And if you have been reading newspapers in the last couple of months, this was there in the newspaper. There is a bank called as RBL Bank. One fine day, RBI announced that they have appointed an administrator. They have appointed an administrator to oversee the functioning of RBL Bank. Right? So, under what powers has RBI appointed this particular administrator to oversee the functioning of RBL Bank? It is given such power under Banking Regulation Act of 1949. I will repeat my statement. RBI can appoint certain staff, certain important people into these particular banks, and they have that power under the Banking Regulation Act of 1949. And that is the precise reason you must see. In various banks, RBI interferes, right? They will simply remove the board. They will appoint an administrator. From where do they get that particular power from? Banking Regulation Act of 1949. Done. That is the first statement. Statement 1 is correct. Cooperative banks are covered under Banking Regulation Act. In fact, this was asked in a different way in the earlier UPSC Prelims examination, Civil Service Examination Prelims. In 1966, remember this, in 1966, Government of India amended Banking Regulation Act. I will repeat my statement. In 1966, Government of India amended Banking Regulation Act and cooperatives were brought under the supervision of RBI. I will repeat my statement. Government of India amended, right, the Banking Regulation Amendment on Banking Regulation Act of 1949 in 66, and they brought these particular cooperative banks under the coverage of Banking Regulation Act as well as under the coverage of RBI. And in fact, this was there again in the newspaper, which was again asked in UPSC. That is, Government of India again amended the Banking Regulation Act, the BRA, Banking Regulation Act in 2020. Right, Banking Regulation Act in 2020 gave more supervisory power to Reserve Bank of India. Why? Please understand the problem here. We generally look at the cooperative bank, and I recommend that you please remember that particular structure of cooperative bank. Cooperative bank basically has a two structure or two, right, the components in the structure as such. One is the urban cooperative bank, rural cooperative bank. Urban cooperative banks can be a single state, multi-state, scheduled, non-scheduled. Whereas in case of rural cooperative bank, we have two pillars again, long term, short term. In case of a long term, we have a primary cooperative agriculture and rural development bank, state cooperative agriculture and rural development bank. In case of the short, we have three pillars here. One is the state cooperative bank, below that there is a district cooperative bank, and below that there is a primary agriculture credit societies, PACS. Now the argument of the RBI has been that with regards to the regulation of cooperatives, specifically cooperative banks here, there is a dual regulation. Some of the regulatory powers have been given to Reserve Bank of India related to banking activities, whereas the administration was given to the state government. It was given to state government. State governments through various registered cooperatives used to oversee the administrative functions of the cooperative banks as such. But with the passage of the Banking Regulation Act, Amendment Act of 2020, RBI has been given much more powers to regulate the urban cooperative banks now. That is also there in the newspaper, very often cited. Please be very, very careful. Done? So have a look at this. First statement, RBI is empowered, correct. Cooperatives are covered under Banking Regulation Act, correct. Both the statements are true. Right option for this particular question will be option C, both 1 and 2. Let me go to the next one. Which of the following measures have been taken to promote digital payments in the Indian economy? Right, digital payments are very, very important. All of you will agree. Right, so one is AEPS, Aadhaar enabled payment system. We'll discuss individually all of them. Don't worry. Second one is UPI Lite. Third one is UPI 1, 2, 3 pay, and all of them are correct. Individually we will take up one question on all of them. Please don't worry, I will explain to you the important points there. So, are these particular measures to implemented to promote digital payments in India? Of course, yes, all the three are correct. Right option for this particular question will be option D, that is 1, 2 and 3. Sir, what is UPI Lite? What is 1, 2, 3 pay? Just give me some time, we will have a discussion on all of them. Let's start. Which of the following services are offered under AEPS? Which of the following services are offered under AEPS, right? And what is the abbreviation of AEPS? Aadhaar Enabled Payment Systems. Aadhaar Enabled Payment Systems. Now, what is this concept of Aadhaar Enabled Payment Systems? Have a look at the picture here. Assuming all of you have Aadhaar, you can basically use Aadhaar now to conduct banking transactions. How, sir? Right, have a look at this. Go to any business correspondent, right, and basically there is a virtual ID. You can use the virtual ID or you can use your 12-digit Aadhaar number. Provide this particular, right, there is a POS, point of sales machine. Enter this particular Aadhaar number. Now, within this particular POS, the menu will pop up, right? The menu basically, right, have a look at this, will show whether you want to withdraw money, whether you want to deposit cash, whether you want to go for a balance inquiry, whether you want to go for a mini statement, etc., etc. There are so many services that will be provided. And out of this, right, now once you choose the option, they will display which bank account you have. Connection is there, the bank account will be displayed. You choose the bank account and, right, you can basically use it to withdraw money, generate a balance payment, etc. Sir, what about the PIN here, right? Basically, you can use your fingerprint scanner and provide the authentication and, right, basically use receive the cash and start going to movies, purchase books, etc. like this. So, this is a basic idea of Aadhaar enabled payment systems. Aadhaar enabled payment systems has been launched very recently by Reserve Bank of India, that is NPCI to be very precise. Very, very important. And logic is very simple here. You don't have to carry your debit card, you don't have to carry, right, any other instrument, you don't have to go to the ATM also. You can simply use any of these particular facilities to withdraw, right. Let's say in case of this banking correspondent is there, you can withdraw the money from here itself, right. Otherwise, you can go to ATM, use your Aadhaar, right, and get the money. So, that is the basic idea of Aadhaar enabled payment systems, AEPS, Aadhaar enabled payment systems. So, cash withdrawal is that one of the facilities? Of course, yes. Cash deposit, can you make that? Yes, you can do that also. Balance inquiry as well as mini statement. All the four are the type of transactions which can be conducted under the concept of Aadhaar enabled payment system. Done. So, all the four are correct. Right option will be option D, 1, 2, 3 and 4. Done. Let me go to the next question now. Consider the following statements regarding TReDS. Now, what is this particular TReDS? TReDS basically refers to Trade Receivable E-Discounting System. Trade Receivable E-Discounting System. Trade Receivable E-Discounting System. Right, this is the concept of the TReDS. Now, what do you mean by, right, the e-discounting system here? Imagine you are a micro enterprise, you will sell certain goods to me, right. I will basically say I will pay you 2 lakh rupees, but after 45 days. Here is the buyer, I am here and you are the seller. So, you will basically sell the goods to me. I will say yes, I will give you money, but give me 45 days. It happens, right. That is how the payment cycles are operated in the economy. But what if as a micro enterprise you want money? Sir, why will I require money? You want to purchase raw materials. You want to basically, right, let's say pay salaries or wages to the employees. Right, for whatever reason, you want money now. So, there is a system called as a TReDS which has been developed. It is simply nothing but it is an exchange. It is an exchange portal which has been set up. It is an exchange portal which has been set up. Now, what will happen in this particular portal? Have a look at this. you have bill, you have a receivable. Receivable means you have a document which shows that I am supposed to pay 2 lakh rupees to you. So you will basically put this particular the bill right on sale in the TReDS platform. Is it okay? There is a TReDS platform, you are registered there, you will put it on sale, you will put it on sale on this particular platform, and there are many financiers who are part of the TReDS platform. There are many of these particular financiers who are part of the TReDS platform. For example, any example of a TReDS platform, sir? M1 Exchange. M1 Exchange. This is one of the biggest TReDS platform in case of India. So have a look at this. You are registered here. You will basically put it on sale. Now, many financiers are there. You will choose one financier based on, let's say, charges, etc. You will choose one financier. Within couple of days, in fact 24 to 48 hours, the financier will purchase the bill from you, pay the money to you. Is it okay? The financier will purchase the bill from you and pay the money 2 lakh rupees to you. But there is a catch here. What is the catch? This financier will impose certain charges. For providing these particular services, they will impose certain charges, collect money from you. Done? Right now, what is the use for this particular financier? Right? Let's say, out of 45 days, 15 days are over now, and you have sold this particular receivable to a financier. Now the financier has paid money, has collected certain charges from you. Next 30 days, he will keep the bill with himself. After 30 days, that is totally 30 plus 15, 45 days are over. The financier will sell this particular trade receivable, will give this particular trade receivable to the buyer, collect 2 lakh rupees from the buyer as such. This is how the concept of TReDS will actually function, right? And this whole process is nothing but concept of factoring. This is also there in the newspaper. Please be very, very careful. The whole process that I have explained just now, it is referred as a factoring. And why this was there in the newspaper? Government of India has amended a Factoring Act. Government of India has amended Factoring Act. Earlier, right, understand this very carefully. Earlier, very few number of NBFCs were allowed to provide factoring services. What do you mean by factoring services? In case of factoring services, the trade receivables are purchased and financing is provided. Very simple. Trade receivables are purchased, money is provided, right, and then the money is collected from the third party like this. This whole process is called as a factoring service. So earlier, very few NBFCs were allowed to participate or were allowed to provide factoring services. Now, Government of India, by amending the Factoring Act, has removed certain conditions, has relaxed certain conditions, and as a result of this, a large number of NBFCs now are allowed to provide factoring services to the MSME sector like this. Right? So that is the reason why all of these particular points become very, very important for the prelims now. Done? Right. So come back to the question here. Right. So consider the following statements regarding TReDS. The settlement limit under this has been set at 1 crore rupees. No, RBI has increased this very, very recently. Right. RBI has increased this settlement limit to 3 crore rupees. The value of settlement under this has been increased to 3 crore rupees under TReDS platform now. It is not 1 crore. First statement wrong. NBFC ICCs with approval from RBI are permitted to provide factoring services. This statement is true. NBFC ICC is one of the classes or the classifications under NBFC, categories of NBFC. They will have to take the approval from RBI first and only then they are allowed to provide factoring services. So second statement is true. Right option for this particular question will be option B, only 2 is correct. Let me go to the next question here. Consider the following statements. Russia is the first country to be removed from the SWIFT system. Please be very, very careful regarding SWIFT. Please be very, very careful. Now, what is the long form of the SWIFT? You find out. I can simply write it, but do some work, Right, very easy. Please try to remember. UPSC can ask you the abbreviation of it. SWIFT is basically a cooperative of banks. I'll repeat it. SWIFT is nothing but a cooperative of banks. What is the use of the SWIFT? SWIFT is simply a messaging service. I'll repeat my statement here. SWIFT is simply nothing but a messaging service. For example, let's take a very simple example. Imagine you will go to a foreign country, let's say Australia, because now we have signed a trade agreement with Australia. You can easily go, service sector will become much more, we will get a lot of benefits because of this agreement with Australia. You will go to Australia, you will earn certain amount of money, you want to send money to your parents, right? You want to send money to your parents or your spouse, or whoever it is. Now have a look at this. Because the transfers are happening from one country to another country, that is cross-border financial flows are happening. Generally, before the transfers can happen, the banks in these two countries will send a message to each other. I'll repeat it. Before the money can be transferred, the banks, right, in both of these particular countries will talk to each other, send messages to each other like this. That message which is transferred from or transmitted from one foreign bank into India and back into a foreign country like this is done through the SWIFT system itself. It is done through SWIFT system. So remember this, money is not transferred through SWIFT, messages are transmitted. Is it okay? I'll repeat my statement. Money is not transmitted here, right? Money is not transferred, money is not even held in the SWIFT system. SWIFT system is merely used to transmit messages across the border like this, right? So Russia is the first country to be removed from the SWIFT system. Absolutely no, statement is wrong. Much before Russia, Iran, right, has been removed for many years from the SWIFT system. Earlier, sanctions are imposed. Generally, they will remove these countries from the SWIFT system. Second, SWIFT is a cooperative of banks. Yes, the statement is correct. SWIFT is a cooperative banks. Correct, the statement is correct. So the right option for this particular question will be option B, only 2 is correct. Okay, let me go to the next question now. Consider the following features of, consider the following statements regarding UPI. UPI basically stands for Unified Payments Interface. Okay, UPI basically stands for Unified Payments Interface. First statement, feature phones can use this facility, right, through NUUP. What is this NUUP? I have given the abbreviation here. National Unified USSD Platform, right? NUUP, National Unified USSD Platform, right? So is the statement correct? Technical statement, but is it correct? Statement is correct. So what is the meaning of this? Smartphones can use UPI. I am pretty sure all of you are using it. Smartphones very easily can use the UPI, transfer funds, right, do many activities. What about the feature phones? Can the feature phones use UPI, make transactions, make payments, for example, peer-to-peer, right? There is a term here, P2P. P2P stands for person to person or peer to peer. Can I transfer funds to you using a feature phone and UPI? Is it possible? Statement is correct. It is possible. Remember this, it is possible, right? I have given the statement for a very simple reason. Many of the times because we are accustomed, because we are using smartphones and we are conducting UPI transaction, we simply are of the assumption that only smartphones are useful here or UPI is compatible only with the smartphone. Absolutely no. Absolutely no, it is wrong. The UPI can be used to transfer funds, right, through the concept of USSD, right, even with the feature phone. That is, you must have heard of the *99 hash. This particular facility, *99 hash. Okay, I've given it here. *99 hash. Right? This is basically utilizing the concept of USSD to conduct, right, the transactions. So have a look at this. Using the *99 hash, what kind of services you can avail? The feature phones. You can get the account balance. You can get mini statement. Send money, right, to the other customers or let's say your friends. Send money using IFSC also, right, know your MMID, right, change your PIN also. So even if you have a feature phones, can you transfer the funds under the concept of UPI? Yes, you can do it. and that is called as NUUP, National Unified USSD Platform. In simple terms, *99#. So first statement correct. Second statement, UPI allows P2P and P2M transactions. P2P simply means person to person, peer to peer. Can I transfer funds into you, right, your bank account? Of course, yes, UPI allows that. Can I transfer the funds to merchant? P2M stands for merchant here, person to merchant. Can I transfer the funds to merchant? Of course, yes. Right, you must have used the mobile so many times, right, by end of the day by now. Right, you went to a restaurant, you ate, you simply scanned, UPI code is there. Right, you went to, let's say, watching a movie, you will scan, get the tickets. You went into, let's say, a shop to purchase goods, you purchased, then you scanned. So person to merchant, is it feasible, is it allowed? Of course, yes, it is allowed. So 1 is correct, 2 is correct, right option is option C, both 1 and 2 are correct. Done? So this is a very important question, why lot of discussion is happening with respect to promotion of digital payments, right, or let's say promotion of making transactions, digital transactions even without internet connection, right. So already the feature is there, but now RBI is making it much more feasible, much more compatible now. Okay. Next question. Consider the following statements regarding UPI Lite. Consider the following statements regarding UPI Lite. It will provide on-device wallet functionality. Transactions through UPI Lite will be requiring additional factor authentication, AFA. What is the meaning of each of the statement? Let's understand this. First and foremost, what do you mean by UPI Lite? UPI Lite simply allows you to make transactions, make payments even without internet connection. I'll repeat my statement here. Right, the UPI Lite will allow you to make payments even without internet connection, digital payments without internet connection. That is the basic idea of UPI Lite. Now in UPI Lite, what happens? You need a smartphone, download UPI app as such. Now in the UPI app, there is a feature, that is, would you want to activate UPI Lite? They will ask you, would you want to activate UPI Lite? If you choose that option, basically it will create a wallet in your mobile phone. Is it okay? It will create a wallet and you can simply transfer money from your bank account into this particular wallet. Now you don't have to, right, have internet connectivity to transfer or make a payment whenever you purchase something from the shop like this. So you can simply scan, right, from the UPI app, you can make the payment. This particular feature is called as UPI Lite. This is referred as UPI Lite. And have a look at this. Under UPI Lite, it will provide a wallet service, that is on-device wallet facility will be provided. The maximum amount of money at any point of time that you can keep in the UPI Lite will be 2000 rupees. Remember the statement here. Maximum amount of money that you can keep in the UPI Lite wallet will be 2000 rupees. And if you want to transfer funds into this particular UPI Lite wallet, you need internet connection. I'll repeat my statements here, understand all of them very, very clearly. You want to transfer funds into this wallet, you need internet. You want to make payment using this wallet, you don't need internet. You don't need internet. Remember this very, very carefully. That is the reason they will say that the UPI Lite will provide you a facility of debit transaction which are offline, credit transaction which are online. Meaning you want to transfer funds into this particular UPI Lite, you need internet. You want to make payments from UPI Lite, you don't need internet. That is the basic idea of, right, the UPI Lite here. Okay, this is the basic concept of UPI Lite. Look at the question statements now. It will provide on-device wallet functionality. Yes, right, within the device a wallet would be created under UPI now. Statement is true. Transactions through UPI Lite will require additional factor authentication. Right, what do you mean by this? Let's take a very simple example. Imagine you go to a shop, there is a QR code, you will scan it. Immediately payment will not be done. They will basically ask you to type in UPI PIN. All of you will agree? right? You will scan, they will show the amount, right? You will hit confirm. Then the next page, immediate next page will be please key in, please type what is your UPI pin, right? That is the basic idea of additional factor authentication. Or else I will give you another example. Many of the times when you are booking, let's say, flight tickets, movie tickets, and you make a transaction using your, let's say, debit card or credit card, the bank will send you OTP. The bank will simply send you one-time password, OTP. That is also an additional factor authentication. So in the context of UPI Lite, would you require additional factor authentication? Absolutely no. Additional factor authentication will not be required if you want to make payments through UPI Lite. Right, so first statement correct, second statement wrong. So which of the above statements is or are true? Right, one is correct, that is option A is correct here in context of this particular question. Okay, so next, right, next is which of the following is likely to impact, or which is the likely impact of dollar rupee buy or sell swap conducted by RBI. Very, very important. As far as I am concerned, this concept is very important, right? Why? In the last 1 month, this particular, right, auction was conducted by Reserve Bank of India. Now, what do you mean by the dollar rupee buy or sell swap? Right, understand this. If you basically move the terms around like this, you are going to have a different meaning altogether. Because whenever you talk about this function of RBI, it could be written like this: dollar rupee buy sell. This is one. Dollar rupee sell buy. This is the second. Both are not one and the same. Right, you will see, sir, you have written 4 terms. Dollar rupee buy sell. Right, you have arranged this side, that side. Right, are both of them one and the same? Absolutely no. Both are different. Why? What is the meaning? Whenever they will write in this sequence, imagine I am talking about this, it simply means dollars are being bought by RBI, rupees are being sold by RBI. I will repeat my statement here. If it is written in this sequence, dollar, rupee, buy and sell, dollars are being bought, purchased by RBI, and rupees are being sold by RBI. And when it is this sequence, dollars are being sold by RBI and rupees are being purchased by RBI. That is the reason this sequence is very, very important. Sir, why is RBI doing this? Imagine continuously there is an inflow of dollars into India. Imagine continuously there is inflow of dollars into Indian economy like this. Would you prefer that situation? Continuously uncontrolled import of dollars. And if that happens, what do you think will happen to the Indian rupee? Indian rupee will start getting appreciated. And in the international trade, I am pretty sure you must have read about this. Uncontrolled appreciation of rupee is not good. Uncontrolled depreciation is also not good. So RBI has to intervene. So whenever there is a continuous rupee appreciation because of continuous inflow of dollars like this, RBI will purchase, RBI will basically suck out dollars from the market, right, and supply rupees to the market so that the rupee gets stabilized. And in the second situation, there is a continuous outflow of dollars from India, continuous outflow. For example, last 2 months, there is a continuous outflow of dollars from the Indian market. Now that is also not good, because continuous outflow means people have, that is foreign investors have rupees, they will sell the rupees, purchase the dollars, rupee will continuously get depreciated, dollar will become appreciated. Can you allow rupee to continuously depreciate? That is also not good. So again RBI has to intervene. RBI will basically sell dollars, increase the supply of dollar and suck out rupees from the system, take out excess rupees from the system like this. So whenever the rupee rate, that is rupee exchange rate, right, is destabilized, right, it is either continuously appreciating or continuously depreciating, RBI plays a very, very important role, either supplies dollars to the market or takes out the dollars from the market. That is the role of Reserve Bank of India in the Forex market. Now look at the question. which of the following is likely the impact of dollar rupee buy sell swap? Dollar rupee buy sell means what? Dollars are being purchased, rupees are being sold. What is the likely impact of this particular swap? Let's start. Dollars will be bought, rupees will be sold, right? Sir, where will they sell it? To banks. RBI, so have a look at this. Here is RBI, here is bank, right? If I say dollar rupee buy or swap, buy and sell, right? RBI will buy dollars from bank and in return give rupees. So as a result of this, what is the likely impact? Rupee liquidity in the market increases. Rupee enters into the banking sector. Will the liquidity increase? Yes. Right? Rupee will increase. Rupee will appreciate. What is the connection here? Right? Why is RBI doing this? Why is RBI doing this? RBI is doing this for a very simple reason. The supply of dollar is very high in the market. Demand for rupees is very, very high. I repeat, supply of dollars is very high. Demand for rupees is very high. Rupees continuously appreciating. So RBI doesn't want continuous appreciation of rupee. Uncontrolled appreciation or depreciation, not good for any economy. So what does RBI do? They do not want rupee to continuously appreciate. No, they want to control that appreciation. So will the rupee appreciate here? No, rupee will not appreciate. Rather, the appreciation rate will actually fall down. Increase the supply of dollars in the economy. Is dollar being supplied by RBI here? No, RBI is taking out the dollars, purchasing the dollars from bank. So it will not increase the supply of dollar, it will rather decrease the supply of dollar. Right? So one is correct. Right answer to this particular question will be option A, only one. Is right? Again, don't get confused. First will be rupee liquidity increases. RBI gives a rupee to bank. Banks will have more money, so liquidity will increase. Done. Rupee will appreciate. When does rupee appreciate? Where do you think rupee will appreciate? Whenever the demand for rupees is very high, continuously dollars are being sold and rupee will be purchased, rupee will appreciate. But what is RBI doing? RBI is purchasing dollars, selling rupees. Understand the sequence here. Whenever rupees are purchased, rupee will appreciate. But is RBI purchasing rupees? No, RBI is selling rupees so that the appreciation rate will be dragged down. Second one is wrong. Increase in the supply of dollars? No, RBI is actually taking out the dollars from the system. Right option is option A for this particular question here. Okay. So these are the various questions that I wanted to discuss in the first session or the first lecture on the Target Prelims 2022 in the economics. Now before I wind up, if you like this particular initiative, please hit the like button, subscribe to BYJU'S Exam Prep IAS. Like I've told initially, this is a continuous initiative. It will continue for another 20 days. Please join us live every day at 7:30 and please hit the bell icon so that before the start of the session, you will get the intimation from the YouTube so you can join the session. Please hit the like button, provide the comments in the section below. And if you find this useful, please recommend our channel, these videos to your friends so that they can also get the benefit of these particular videos and ace the UPSC Civil Services examination. So that's it from my side. See you tomorrow again with the second video on Indian economy. Take care. Have a great day.